A record 53% of investors flipped to being bullish on the stock market on July 17th. This is a significant shift to the sentiment we had back in April when only 30% of investors were bullish on the stock market. This level of investor sentiment is something that we've only seen a handful of times over the last decade, telling us that investors were particularly bullish on the stock market on July 17th. Now, when we look at the actual S&P 500 index, this bullish sentiment occurred right here at the peak of the stock market rally. S&P 500 has come down by over 3% since then. As a trader, you want to be increasing your exposure in corrections like we saw in April, where most investors were bearish on the stock market, and decreasing your exposure to the stock market during these types of periods where the stock market is overextended. So buy low, sell high. I'm proud to say that this is what we've done throughout 2024. We added a large number of equity trades to our website during this correction in April, and we booked profits on a lot of them in June and July. But today the question is whether this is all the pain that we're going to get, or whether this was just the first part of a much larger stock market correction. Even during multi-year bull markets, the stock market usually experiences multiple 10% corrections. We saw 6 corrections like this between 1990 and 1999, and we saw 7 of them between 2009 and 2020. A 10% pullback today would take the US stock market back down below 5,000 points, wiping out almost the entirety of the stock market gains we've seen throughout 2024. In this video, that's the question that we're going to be answering. But before I do, I want to warn you, I don't have a crystal ball. I don't know what's going to happen next, and I've made wrong calls before. The only guarantee I can give you is that that's going to happen again. I'm going to share with you exactly what we're telling our members in order to prepare properly for the environment that's coming and ideally profit from this situation. The S&P 500 broke below a key trendline support right here on the 18th of July. You can see the last 2 times that occurred over the last couple of years. It did set off periods of volatility on the S&P 500. The market corrected 9% in late 23 and 4% in April of 24. So it could be that this breakdown plays out for a short-term period of volatility on stocks. But when we look at the broader technical structure of the stock market, we undoubtedly remain in a strong uptrend. We have all of the key moving averages that are pointing upwards, and price is still trading well within a very well-defined and aggressive upwards price channel. So if you're flipping bearish on the stock market today, you're fighting the trend. Notice how this is a substantially different look to what we had in January of 2022 when the stock market sliced through all of its key moving averages and breaking the bullish technical structure on the market. So could we see more short-term volatility on stocks? Absolutely. But with this bullish technical structure, we have to have an upwards bias on the market, however crazy that may sound. If we start to see the S&P 500 break below this price channel here, that would start to get us concerned and open the door potentially for a move down much lower. Now, do we think this is a likely scenario? Let's dig into that. This is a chart of the VIX. It's the volatility index of the S&P 500. When volatility spikes, like in these instances here, it usually means the S&P 500 is moving lower. You can see all of those spikes on this index have coincided with moves down on the S&P 500. And the recent correction on the S&P 500 is no different. We've seen a spike in S&P 500 volatility. Now, you can also see that the VIX has generally been trending lower over the last couple of years. And when we draw out a simple downwards trend line like this, we see there could be a little bit more volatility before this correction is done, but if the trend remains intact, this is likely to turn around quite quickly. Seeing the volatility index of the S&P 500 respect a key downtrend line is something that we've seen many times in the past. Many people don't believe that the VIX can be used as a tool to time the market. The truth is, but we've been able to time both market peaks and bottoms using the VIX in the past, using this exact type of setup. So don't let other people dictate what works or what doesn't work. If it works as a strategy for you, that's all you really need to know. Now, again, if the VIX begins to break above this downtrend, that will be a warning signal and we'll start to change our tone regarding our outlook on the market. For now, this just looks like another spike in volatility that can probably be bought. In fact, we have evidence that smart money is quite optimistic about the stock market today. This is a chart called the OEX, open interest ratio, and it's an indicator that we use to gauge smart money sentiment. When the open interest ratio is elevated, it means that these OEX traders are betting against the market. And when we look at all of the spikes on this OEX, open interest ratio, a lot of them coincided with significant market peaks. Most of these spikes coinciding with pretty significant market corrections. And the very opposite is true when this ratio is quite low. When it's low, it means these OEX traders are betting long on the market. And you can see all of these instances right here were followed by significant market rallies. And today, that's exactly what these OEX traders are doing. The open interest ratio is historically low, meaning that these investors are generally bullish on the market. Now, this is just one indicator that we use in our analysis, but again, paying attention to it in the past has often given us the right bias on the market. So to be abundantly clear, we're not yet flipping outright bearish on the stock market. There could be a little bit more volatility in this correction, but the stock market remains in a very strong uptrend. And for now, we don't have any reason to expect that this is imminently going to turn around. And I want to warn you, that could change quite quickly if the price action or the other things that we're looking at begin to shift. But today we're still holding on to a lot of the trades that we added in April, such as small caps, biotech stocks, Solana that's up 30% since we initiated that trade. We've actually been using this pullback as an opportunity to add certain trades that we've been waiting for during this very, very strong market with very little pullbacks.